Assalamualaikum everyone. Our group today will be presenting about working capital management for YTL Corporation Berhad.
Before we get started, let's meet our group members.
YTL Corporation Berhad is a big Malaysian company that works in construction, energy, property and hospitality. It stays financially strong by earning steady income and making smart investments. YTL also focuses on sustainability and good management to ensure long-term growth. Now, I'm gonna talk about company's background. YTL Corporation Berhad, founded in 1955, is a major Malaysian multinational operation in 11 countries. In 2023, it recorded RM 29.62 billion in revenue and RM 2.12 billion in net income. Its key subsidiaries cover utilities, construction, property, hospitality, telecommunications, and also transportation. Guided by its motto and mission, YTL focuses on quality, innovation, and sustainability while serving over 12 million customers worldwide.
Next is working capital. Working capital is the difference between current assets and current liabilities, showing how much a company has for daily operation. It reflects short-term financial health and the ability to cover expenses, debts, and inventory needs. Positive working capital means the company is stable and able to grow, while negative working capital may indicate financial trouble and difficulty meeting obligations. Next is working capital importance and objective. Working capital is important because it keeps a business financially stable and able to pay its expenses, debts, and daily needs. Effective working capital management helps a company reduce costs, increase return, and improve overall profitability. Its main objective are to maintain an optimal balance of current assets and liabilities, minimize financing costs, control inventory and receivable, and ensure the company has enough liquidity to operate smoothly. Next, I will show the income statement and financial position as at 13 June 2024 for YTL Corporation Berhad.
Now, I will explain about the categorization of assets and liabilities. Assets are divided into non-current and current. Non-current assets are long-term items like property, equipment, and investment. Current assets are short-term items such as inventories, receivable, and cash. Next, liabilities are also split into non-current and current. Non-current liabilities are long-term borrowing and payables, while current liabilities include trade payables, contract liabilities, and short-term borrowing. Next, temporary versus permanent current asset. Permanent current assets are items the company needs all year, like inventories, receivable, and cash. Meanwhile, temporary current assets are changed depending on projects or season. For example, contract asset, property, development costs, and short-term investment. Now, I will talk about the calculation of net working capital. The formula for net working capital is net working capital equal to current asset minus current liabilities. This formula shows how much short-term resources the company has left after paying all short-term obligations. A positive value means the company has healthy liquidity. For 2023, the net working capital is at 9.02 billion. Meanwhile, for 2024, the net working capital increased to RM 10.45 billion, showing an improvement compared to 2023. These increases suggest that YTL has strengthened its ability to cover short-term obligations and manage its working capital more efficiently. Next is current ratio. The formula for current ratio is current ratio equal to current asset divided by current liabilities. This ratio measures whether the company can pay its short-term obligation using its short-term asset. A higher ratio means stronger liquidity. For 2023, the current ratio is 1.59 times. Meanwhile, for 2024, the current ratio increases to 1.68 times. This improvement shows that YTL is in a better position to cover its short-term debts in 2024 compared to the 2023.
For financing sources used for current and fixed asset, ways to identify uses and sources of funds for according to YTL Corporation Berhad's statement of financial position at 13 June 2024, we identify sources of funds when it was decrease in asset, increase in liability and equity, earning after tax, and depreciation, while uses of fund is identified when increase in asset, decrease in liabilities and equity, net loss from operation, and dividends. Next, I will show the uses and sources of funds according to YTL Cooperation Berhad.
There are three types of working capital policy. The first one is relaxed policy, where the firm keeps a large amount of current assets and offer easy credit terms. The second is moderate policy, where current asset levels are kept just enough to maintain liquidity, allowing more funds to go into higher return fixed assets. And lastly, restricted policy, where the firm keeps very low level of current assets and has strict credit terms. For our working capital policy, after finding the net working capital and current ratio, we have concluded that the YTL's corporation have a moderate working policy. The reason why YTL's corporation hold a moderate working policy is because YTL demonstrated a well-balanced liquidity position reflected in its 10 billion net working capital and a current ratio of 1.68 times, where it is in the realm of moderate policy. Furthermore, with 25 billion in short-term assets against 15 billion in short-term liabilities, the company shows prudent management of its immediate financial obligations, supported by strong operational cash inflow of 6 billion in 2024 and disciplined practice such as maintaining supplier payment terms of 30 to 180 days and enforcing strict expected credit loss assessment.
Okay, now we move for my part is a financial strategy. Financial strategy is a plan for how a company manage and use its money. It is explain how the company get its funds and how those funds are used for operation and investment. A good financial strategy help a company maintain financial stability, reduce risk, and ensure continuous growth in a competitive market. Okay, now we move for the type of financial strategy. For the type, we have three. For the first, aggressive approach. Second type is a hedging approach, and the last type is a conservative approach. Identify the company financing strategy. YTL Corporation Berhad. To identify company financing approach, we compare non-current and current liability. Since YTL Corporation Berhad use more long-term financing than short-term loan, it shows that the company applies a conservative financing strategy. This indicates that YTL prioritizes financial stability, lower risk, and strong liquidity. By using long-term financial, such as equity and long-term loan, the company can avoid short-term repayment pressure and continues operating smoothly even during uncertain economic conditions. This proves that YTL practice careful financial management and focus on sustainable long-term growth. This is for graph conservative. This graph provides a clear visual insight into the financial structure of YTL Corporation Berhad, highlighting how the company strategically manage its long-term and short-term liability. Okay, for the justification, YTL Corporation Berhad use a conservative financing strategy because long-term liability are higher than short-term debt. This shows that the company focus on financial stability, low risk, and strong liquidity to support long-term growth.
To conclude, our analysis shows that YTL Corporation Berhad manages its finances and working capital in a very stable and responsible way. Based on our analysis, the company has strong liquidity and is able to meet its short-term needs without difficulty. We also identified that YTL Corporation Berhad applies a conservative working capital approach, which depends more on long-term financing to reduce risk. At the same time, the company follows a moderate working capital policy, where its current assets are kept at a balanced level. These two approaches help YTL to run its daily operations smoothly while still using its funds efficiently. For our group reflections, this assignment helped us to understand how these subject concepts such as liquidity, working capital, and financing strategies are applied in real companies. It's also improved our teamwork because each member was responsible for their part, and we support one another throughout these projects. That's all from us. Thank you.